Welcome back to the podcast, everyone. I'm super, super excited for today's guest, and I will maybe tell you why later. All right. So his name is CJ Yamada, and he runs the largest investor meetup in Nevada with 1,100 members after 3 years. Okay. And trust me, that's not an easy feat. That's definitely something that I want to try to emulate. He manages assisted living facilities. Okay. Maybe he can fill us in on the numbers later. And most importantly, is that he has achieved financial freedom, financial independence, whatever you want to call it. And for me, I think that's definitely a goal that many people have. So I think, the best thing, if you want to achieve something, the best thing to do is to talk to the people who have achieved what you want to do and then learn from them. So let's see what we can learn from CJ today. CJ, anything you want to add before we jump into the questions?
No, I'm gonna add some more doing my story, but thank you for the
Okay.
introduction, Zach.
All right,
Glad
great,
to be
great, great.
here.
All right, so first question, simple. How did you get into real estate? What inspired you? And then what was the aha moment where you decided to focus maybe on multifamily or senior living, specifically?
Yeah, so I currently own about 259 units of assisted living facility and also closing 143 units assisted living facility,
Hmm.
Florida, and a hotel in California. But anyways, my real estate career started back like 5 years ago, 6 years ago. I still own my solar company, and
Hmm.
I was 100% committed to daily sales, meeting, pipeline management, hiring, training, firing, all that process. I was small business owner, and it was doing great. I was happy with the income I generated through the business. At that time, we lived in California,
Hmm.
owning a profitable business. And I found out, number one, I have a huge tax program
Yeah.
and also a time program. I was busy running a business. Basically, business was running myself at that point,
Hmm.
and time issue. I needed to buy back my time.
Right.
So I was researching, listening to podcasts, watching YouTube videos, finding out what other people are doing once you have certain income. In that sense, I was rich, but
Hmm.
I'm not wealthy, right?
Right.
So, first move was obviously getting out of California, and then we moved to Nevada, Las Vegas, Nevada, Henderson, Nevada, actually,
Okay.
and started investing real estate syndication deals to generate passive income and also paper loss, cost out of cost segregation.
Right.
After doing a couple of days, I realized I can do this as a general partner instead of spending time on my solar business. I can spend more time on real estate acquisition, raising capital, underwriting deals.
Hmm.
And my first deal happened to be 49 units assisted living facility in Wisconsin, Madison, Wisconsin.
Okay.
And Wisconsin has a very generous government subsidies for assisted living facilities. So if we want, we can charge 100% those government subsidies to fill out the unit. It's been giving us 7 to 9% annual increase.
Hmm.
Last year, right before the election, they gave us 15%
Oh, wow.
rate increase,
Yeah.
one governor's signature done. So business is good. Time is excellent. I have excellent partners managing deals and watching numbers. And 49 units became 259 units
Uh-huh.
over 3 years. And as I
Okay.
say, stepping into new market, Florida, same asset class. But that's like high level review of my start to today on real estate career.
Yeah, so if I'm not mistaken, you said so you started off as an LP and then realized that you could do
Yep,
more and transitioned into becoming a GP. Okay, excellent, excellent.
correct.
Um, so yeah, can you walk us through your first assisted living deal, like the one in I think Wisconsin? Was that the first one, or can you just walk us through the first deal? Tell us the good, the bad, and the ugly. What surprised you the most? And yeah, just don't leave out anything. Tell us
Yep.
everything. Hmm.
Um, 49 units. So I'm originally from Japan.
Hmm.
To be honest, I didn't know exactly where Wisconsin was before my first deal.
Yeah.
And as assisted living facility, I had no experience. It just
Right.
happened to be on my table out of one of my network.
Mm-hmm.
And 49 units became initially really tough because of property management we hired.
Okay.
We didn't have any experience in assisted living facility, and we did as deep research as possible on that property management company, but I found out they didn't make us profitable.
Yeah.
And we felt they were stealing money, right? So we fired them, and my partner in Wisconsin they started own property management company for assisted living facility. So we hired us
Mm-hmm.
basically, and deals started turning around. And also when we acquire more units in this, greater market, um, cost per bed, cost per food cost per bed, labor cost per bed started going down and business
Right.
started, getting more profitable and less expenses and stuff. So first deal, if I could go back, I will weigh more on property management due diligence,
Yep.
not only deal due diligence, and also go bigger. Especially 49 units, we have
Okay.
three buildings. So each building requires to have like a management position, right? So even 49 units, we have to have three, four management managers.
Managers. Yep.
Okay. If it has only one roof and big 49 units, same 49, but we could have only one manager, one simple communication.
Right.
So it's a little harder for us to manage those local managers at the site and also building or rebuilding, reconstructing the culture
Mm-hmm.
vibe between nurses and caregivers. That's a human business,
Right.
not like apartment or self-storage business. So that took a little longer time. Uh, yeah, that was our expense to
Yeah.
acquire the first unit.
Okay, so it seems like yeah, I think for assisted living, the operator is maybe way more important than even in like the property managers for multifamily. So yeah, definitely doing due diligence there is going to be very very important for your deal and will make or break it. But you brought it
Yeah,
in-house, so well done. Yeah.
it's going
Okay.
great. It's going
Yeah.
great.
Yeah. So how has your strategy evolved since that first deal? So for example, your deal criteria, like you just mentioned, maybe the size, has that changed?
No, bigger the better, as long as we can close it.
Mm-hmm.
Other than that, you know, uh, we are looking more for situation, not only the deal.
Yep.
We try to buy those deals from retired landlord, and key words, key phrase we want to hear from the ownership is it's time for me to go to assisted living facility. So they are
Yeah,
late
okay.
60s, early
Yeah,
70s, and holding the business quite a long time, and they're willing to exit because they have to.
right.
And usually, operating technology and managing technology are not much advanced
Mm-hmm.
when those seniors manage businesses. So we
Yep.
step in, and of course, the income keeps going up. That's a big silver tsunami. 10,000 people turn 65 years old every single day.
Right.
Um, but also at the same time, we want to optimize expenses and operation. Number one is insert more technology and app software, and also scalability. We stay focused on 2 hours driving distance from Madison, Wisconsin,
Yep.
so we can have scalability power in the local market.
Okay. And then
Yeah.
still sticking with maybe like how you have evolved since your first deal. What about like any mindset shifts after you close the first deal?
No, it gets easier.
Mm-hmm.
When you do close it, investors want to see how my assets perform.
Right.
Broker knows we can close, and banks want us to borrow more money. It gets easier and easier and easier. First deal, it took me most like 2 years,
Hmm.
and after 2 years from first deal, I closed like 3 deals.
Yeah.
So it's harder to,
To get it going,
to get it going and
build up that
filter right
momentum.
deals
Yeah.
after, yeah, after closing the first deal. Yeah.
Yeah. Okay. Okay. All right. And then how about has your risk tolerance changed or shifted at all or?
No, it's all same template. Always looking for cash flow on day one,
Hmm.
double digit cash on cash on my investment and my investors' investment
Yeah.
over 5 years, and 2.2 to 2.5x equity
Equity multiple.
multiple
Yeah. Okay.
over 5 years, and maximize cost segregation and paper loss.
Hmm.
Um, yeah,
Yeah. Okay.
a
Well,
lot of
those definitely sounds
opportunities
like
out
good
there.
numbers.
Yeah.
Good numbers. Good numbers. Hey, if you've got a real estate deal, a problem, or even just a question, we want to hear about it. Doesn't matter if it's big, small, complicated, ugly, or somewhere in between. If it's a good deal, we're absolutely interested. Period. And if you've got capital, you need to put to work in solid real estate opportunities. We've got those too. Either way, let's talk. Here's how this works. We always need more deals. We always need more capital. And we always find a way to make it happen. No games, no runaround. If we can't work together directly, we'll hand deliver you to someone who can. Okay, so let's move on to another section of the podcast, which is tips and pitfalls. So just I want to talk a little bit about what are your biggest lessons around, okay, number one, finding deals.
Okay. Um, Finding deals. Be specialist,
Mm-hmm.
not be a generalist. So
Yep.
I was looking for deals all over the nation.
Yes.
Um, any asset class, any size, talking to so many brokers, and
Yep.
my email receives like a 30 emails after lunch, right?
Yeah. Yeah.
And nothing happened.
Mm-hmm.
Nothing happened. So focus on a one thing, one asset class, one market. Even when you live in like LA or San Francisco, New York, there are a lot of multi-billionaires every single corner in this country with
Right.
real estate.
Yep.
So focus is the power. Maybe you want to focus on one street and 30 multifamilies owned by 20 owners. Probably more than half of them are late 70s,
Mm-hmm.
and they might want to get rid of it. And if 20, 30 of them sell you one deal a day, I mean, one deal a year,
Mm-hmm.
your financial freedom is in a couple of years.
Right.
So don't talk about something other people are saying on podcasts and YouTube or networking event. This
Mm-hmm.
is at the end of the day, this is a real estate business.
Right.
You have to provide a unique service between high demand and low supply. So, what's my niche? What's my unique skill set I can differentiate from other competitors?
Yes.
That's the keyword you have to keep asking yourself. And I think one differentiator that everybody has is location. Wherever you
Mm-hmm.
live is really far from other competitors. So
Right.
if you're really starting, maybe starting with your backyard and contacting, 30, 40, 50 multifamily owners, and you might achieve your financial freedom.
Yeah. Okay. So I guess rather than going wide, just go deep, focus, and
Oh
get to know
yeah.
an area and so on. Okay. All right. And then any lessons around, operating. So after you've actually acquired a property, acquired a deal, actually operating it and executing on your plan. So like basically the asset
Mhm.
management. What are your lessons around this?
Partnership.
Mm-hmm.
Partnership. I don't do asset management daily basis. I have great partners and we have great employees,
Mm-hmm.
and those employees have they're great employees, and at the end of the day, each caregivers provide great services, and that comes up to local manager, that comes up to local director, comes up to asset management director, and
Yep.
he reports us. So build a team, build a system. Uh, uh, yeah, that's it.
Okay. All right. Great. And so let's move on to the final round of the podcast for today, the rapid fire round. Okay, I'm just gonna
Already?
throw. Yeah, it's short and sweet,
Okay.
and it's fun. I'm gonna throw some questions at you, and you just don't think. Just hit me with the first thing that pops into your mind. Okay.
I hope
So
so. I hope I can answer.
yeah, don't worry. Well, the first one might be a little bit tough because I don't think we will have this kind of bad experience with assisted living. But do you have a worst tenant story?
No.
Yeah.
Uh, Tenants in assisted living, they're slow. They
Mm-hmm.
don't complain. They don't party,
Yeah.
and they don't get hangover. They don't lose job. They're retired.
Yeah.
But again, management system, local management. Somebody might be stealing money from the building, or somebody might be building bad culture, being a manager, and that might be a reason having high employee turnover. So
Yeah.
instead of tenants, I will say employees.
Okay. Okay. So what's your worst employee story?
No, like it's like a bad culture and bad
Okay, just
vibes,
okay.
and
Yeah.
the building is something somewhere something people didn't want to work for that building because
Mm-hmm.
of her.
Yeah. Okay, makes sense. And then do you have a favorite expense saving hack
Scale,
scale?
scale it, scale 10x, and your expenses way less.
Yeah.
Scale it. It's a buying power.
Okay. And then so there's a lot of advice floating around in the real estate world, just like you said, people on podcasts on YouTube can say anything they want, right?
I mean, you
But
can do like a daily little things and make a little changes to punch down 1-2% expenses. But end of the day, scaling is completely different. So if you're looking for a 12 units just because you feel you can afford,
hmm
make a better partnership and go to 120 units. It's
hmm
way easier, way faster, and way more profitable.
Yeah. Okay. So the question I was going to ask next is about advice. What do you think, just you personally, what do you think is some really overrated advice with respect to real estate?
Overrated advice.
Yeah.
I'll say all the YouTube contents and a lot of podcast contents. Um, when you see the asset class, specific asset class or
hmm
market, business model too, I think it's too late when you learn something from the public.
Yep.
So again, going back to your entrepreneurship EQ, entrepreneurship quality.
Yep.
Um, Focus on like your unique differentiator in your heart and brain, in multifamily too, and provide a unique thing. Go out, network, and chat with local people. Go to big convention to get the local, ideas even before coming to the public.
Yep.
And again, don't do the same thing with other people say when you talk about your business model, plan, location, asset class. um, if a lot of people agree with you, you're too late.
Yep.
Other people doing it. So not a lot of people have figured out. There might be opportunity. Again, your backyard, your
Yep.
your specific niche skill, should do a lot of niche
Okay.
profitability. Yeah.
Okay. Well, you half answered this other question. So then, what do you think is underrated advice with respect to real estate?
Networking.
hmm
Networking. LinkedIn is not networking. I would say podcast, social media, it's a half networking. It's a
hmm
great, you can scale, but the one shake hand can really change your real estate career. Every time I go to a big networking event, I stay out of big room, educational room. What I
hmm
do is shake hands all day long,
Yeah.
whole weekend.
Yeah.
And every time I go, I get the new partner, I get new deal, new opportunity. Network is the power, guys. Meetup is fine too. network is net worth.
Hmm.
So 5, 10 new names to your database, your phone contact, business card box. That should be your goal. Do
Okay.
shake hands, go out and network. That's the power.
Yeah, I definitely agree. Network and net worth. Okay. And
Yeah.
then so what do you so you talked a lot about specialization, right? And then, knowing your backyard, this
Hmm.
kind of stuff.
Yeah.
So what do you think is your superpower or your unfair advantage?
Capital raise.
Hmm.
Capital raise. I came from solar industry, heavy sales, competitive industry. I have a system to acquire more contacts, stay in touch, nurture the
Hmm.
relationship. I'm still learning
Yeah.
from other groups and the mentorship, but capital raising. And so whoever listening to this Zach's podcast, if you have a great deal, short on capital, need someone to sign the loan doc, contact me and I might be help you to touchdown.
Okay. Great, great, great. I
Yeah.
hope some people reach out.
And you
And
too, Zach, when you have a right deal, a
I'm
great
actually
deal,
I'm
send
looking
it
at a
to
deal.
me.
I'm raising capital for a deal right now, but by the time this podcast comes out, we should be
We should do
finished.
deals together. Yeah.
Yeah. Okay. And then I don't like to use the word like regret, but if you can go back, what's one thing that you would do differently?
No, be a specialist. I was trying to do everything, learning basics, high level on underwriting and other asset management. But my specialty was capital raising.
Hmm.
I kind of knew, but I wasn't quite focused.
Yeah.
So if I start over, I'll say, hey, I'm from Vegas. I raised capital, 1 million for the right deal. Right
Hmm.
deal means double digit cash on cash over 5 years, cash flow on day one, 2.5x equity multiple. If we have those deals, I'm ready to raise 1 million.
Yeah.
And I keep the same pitch over and over in the networking event with shake
Yes.
hands. Yeah.
Okay. All right. And then so two or three more questions. One is
Go ahead.
yeah, what is your best advice for new investors? And by new investors here, let's split it into LP and then GP. So what's your best advice
Okay.
for potential LPs?
Potential LPs, look at the jockeys, not only horses.
Hmm.
So asset market, yes, important, but I also look at the GPs more
Right.
carefully.
Yeah.
Not only their background and career, but also their teamwork and how they respond to different difficult questions
Hmm.
is very important. I mean, you ask ChatGPT, it gives you like a 50 questions, and
Yeah.
make sure you ask everything.
Yep.
But at the end of the day, there's no crystal ball. Great, GP teams might fail, and first GP team might give you 3x over only 3 years. Who knows?
Hmm.
So you have a, good capital reserve outside of syndication deal, but to go ahead and invest it, and you know, how can I say, maximize the speed of the failure. So you
Hmm.
can have a checklist and everything, and always have 100% success ratio. Go ahead and mistake, and let's go to next deal. Make sure you don't make same mistake and go ahead next deal.
Yeah. Okay.
Yeah.
And then what would be your advice for potential GPs?
GPs focus on the superpower, market,
Yep.
asset class, rule, like capital raising,
Yep.
underwriting, whatever it is. Focus on one and then do crazy networking.
Hmm.
Crazy networking. Again, handshake is always twice better than social media likes.
Yeah, yeah, fair enough.
Yeah.
Okay. And so one bonus question that I want to ask is about capital
Thank
raising.
you. Yeah.
Yeah, bonus question is about capital raising. So what advice would you give to people who want to specialize in raising capital?
Add value to investors
Hmm.
consistently. Send weekly email adding value to the investors why you are doing this real estate, this asset class, this market, what's the benefit, return, tax benefit, retirement planning, uh, educating. It's like a farming business. It's not a
Hmm.
hunting.
Yep.
When you have a deal, you go out and hunt big investors. Not going to happen. I can guaranteed.
Yep.
What you have to do, best time to raise capital is when you have
Before you
no
have the deal.
deals.
Yes.
Yeah. So
Yeah, yeah,
you
yeah.
go out and get more contacts. Again, shake hands. It's like, again, farming, seed the future investors and water them,
Hmm.
sunlight them, nurture them, educate them, value add them. And then some of them might be interested in investing in your future deals. So don't pitch your deals in the first meeting. That's absolutely no.
Yep.
Building relationship.
Yep.
Yeah.
Okay. Yeah, I wholeheartedly agree with everything you said there. Okay, so one last question.
Oh, come on,
Anything,
give me 10
yeah.
more.
Anything that I didn't ask that you think that maybe someone who is listening to this would have liked me to ask, or anything that you personally wish I asked you, because maybe you wanted to talk about it
So
a little bit more.
let's say first deal or first income, financial freedom, first 1 million raise, whatever it is. First time is always the hardest,
Mm-hmm.
okay? And success leaves financial freedom, even becoming a billionaire. There are a lot of billionaires in this country. Success leaves clues. So stay focused on your path and
Mm-hmm.
find the people walking ahead of you, get their advice, and break it down to daily activity, daily to weekly activities.
Yep.
Stick with it. Don't get lazy. Hangover, rainy days, weekends, holidays. It doesn't matter. Consistency is the only key for success. So break it down to daily, weekly actions and don't give up.
Yep.
Don't give up.
Okay, I love that. I love that a lot.
Yeah.
All right. So what I will do later when I edit the podcast is I'll just put all your contact information on the screen as well.
Awesome.
Yeah, but is there any are there any deals that you're working on right now that you can share, maybe because they are 5 or 6C or
Yeah, it's 506C. I'm sorry,
mm-hmm,
506B. So contact me. One deal already has a wait list, but the
mm-hmm,
contact me, I'm closing 2 to 3 deals at the same time usually. And you don't have to invest with me. I want to add value to you, maybe as an LP, GP, or anything in general, real estate or investing maybe. But the network is net worth.
mm-hmm.
I might be able to help your uncle guys, or you might be able to help someone behind me in my network, and you guys might be able to do deals together. So
Yep.
contact me. Let's set up one-to-one, a phone call. Hopefully, we can meet up in town, Henderson, Las Vegas, Nevada. But again, guys, network is net worth. If you listen to Zach's podcast, contact him if you haven't talked to him yet, and contact me, and let's talk.
Yeah. Okay, great. So thank you very much. That's the end of the podcast for today. Thank you so much for coming on here. Like I said,
Yeah,
there's two things about you that I really, really want to emulate. Number one is the size of your meetup, and then number two is your financial independence. So let's see. Maybe I'll invite you back onto the podcast like 6 months, 12 months later to see how we're both
yeah.
progressing and so on. But thank you very much,
Talking about
CJ. Yeah.
Meetup, sorry,
Uh-huh.
Zach. Talking about Meetup, I
Yep.
started with like a ten people attended a first event, and
Yeah.
7 of them were my friends.
Okay.
And what
So,
I did was monthly adding value, bringing guest speakers consistently every single month. And
hmm.
after 3 years, it just boom happened. So
Right.
there's no magic, guys. It's
It's
farming daily.
consistency, as you said. Yeah.
Consistency is the only key. Yeah,
Yeah. Yeah. Okay. Great,
that's
man.
right.
So I think I said it in the beginning. I was pretty sure that you will add value, and I think you've delivered a lot of value to everyone here, even to
Oh, thank
me.
you.
So thank you very much for joining us today.
Thank
Okay.
you, guys.
All right. Bye, guys.
We'll talk soon.